Hello everyone, welcome back to the new video of AP Knowledge Point. Today's video is about Income Tax Act 2025. The Income Tax Act 2025 represents a landmark structural and substantive overhaul of India's direct tax framework, officially replacing the 6-decade-old Income Tax Act 1961. This new legislation is designed to modernize tax administration, simplify complex language, and improve ease of compliance without fundamentally altering the underlying tax policy. First, timeline and implementation. Effective date. The new act comes into full effect on April 1, 2026. Applicable years. Income tax returns for financial year 2026-27 and onwards will be governed by the 2025 Act. Second, structural overhaul. The legislation has been significantly streamlined to reduce redundancy and improve navigation. Section reduction. The Act has been compressed from approximately 819 sections to 536 sections. Chapter consolidation. The rules are now organized into 23 simplified chapters. Simplified terminology. The traditional and confusing dual terms previous year and assessment year have been replaced by a single unified term, that is tax year. Digital modernization. Definitions of books of account now explicitly includes records maintained on cloud-based storage. Third, revised income tax slabs, new regime. The new tax regime covered under Section 202 remains the default regime. The 2025-26 budget restructured this slab to provide relief to middle income earners. The income tax slabs and its tax rates are given here. Up to rupees 4 lakhs there is no tax. Up from rupees 4 lakh to rupees 8 lakh there is 5% tax. 8 lakh to 12 lakh there is 10% tax. From 12 lakh to 16 lakh there is 15% tax. And from 16 to 20 lakh there is 20% tax. From 20 lakh to 24 lakh, there is 25% tax, and above rupees 24 lakh, there is 30% tax. Standard deduction increased from INR 50,000 to INR 75,000 for salaried employees and pensioners. Effective non-taxable income. Due to the standard deduction and rebates, income up to rupees 12 lakh 75,000 can effectively remain non-taxable. Fourth, business and startup reforms. Startup incentives. The tax holiday for startup is extended for those incorporated up to 1st April 2030. Eligible startups can claim of 100% profit exemption for any 3 consecutive years within their first 10 years under Section 80 IAC. Export incentives. The Act adopts a catch-all approach, bringing all important export incentives like RODTEP, that is, re-emission of duties and taxes on exported product, and duty drawback, definitively under the tax net as business income. Employee welfare. Provisions for Provident Fund gratuity and superannuation contributions are consolidated under a single Section 29. Surcharge deductions. Surcharge on taxes is now explicitly allowed as a deduction only in the tax year it is actually paid. Fifth, TDS and TCS simplification, that is tax deduction at source and tax collected at source simplification. The Act centralizes tax deduction and collection provisions to eliminate overlap and ambiguity. Consolidation. TDS provisions are moved to Section 393 and TCS provisions are moved to Section 394. New forms. Traditional forms are replaced by a new series such as Form 138 for salary TDS, Form 140 for non-salary resident TDS, and Form 143 for quarterly TCS. Threshold increases. The TDS limit on interest for senior citizens has been raised to INR 1 lakh per year, while the threshold for rental income TDS rose to INR 6 lakh. Sixth, digital assets and search jurisdictions. VDA clarity. Virtual digital assets like cryptocurrency and NFTs are now explicitly defined and subject to specific reporting obligations. Search expansion. Search and seizure powers now extend to virtual digital spaces, including email servers, social media accounts, crypto wallets, and cloud storage. Seventh, international taxation and residency. Residency tightening for Indian citizens leaving India. The relief from 60 days plus 365-day rule now applies only if they leave for actual employment outside India, narrowing the previous broader purpose of employment standard. Non-resident services. A new presumptive scheme applies to non-residents providing tech services to Indian electronic manufacturers with 25% gross receipts deemed taxable. Transfer pricing. A block period system allows business to compute the arm's length price. Now, what is arm's length price? The price agreed in a transaction between two related parties must be the same as the price agreed in a comparable transactions between two unrelated parties. So, a block period system allows business to compute the arm's length price over a 3-year period rather manually. Eighth, indirect tax, goods and service tax (GST) reforms. Effective from 22 September 2025, the GST Council simplified the regime into primarily a two-slab structure, 5% and 18% slabs, with a 40% rate for luxury and dermit goods, 5% for dairy products and everyday items such as soaps and toothpaste, new text at 5% from 12%. 18% slab for standard goods like electronics and small cars, motorcycle brought down to 18% from 28%, and with a 40% rate for luxury or dermit goods, that is 40% reserved for luxury and dermit items such as tobacco and high-end vehicles. So let us see some questions and answers based on it. Question 1. Starting from which date does the Income Tax Act 2025 completely replace the Income Tax Act 1961 for the purpose of governing tax filing? The answer is 1st April 2026. Question 2. Under the Income Tax Act 2025, which new term is used to replace the previously distinct concepts of previous year and assessment year? The answer is tax year. Question 3. What is the revised standard deduction amount for salaried individuals and pensioners under the new tax regime section 202 as per the 2025 reforms? The answer is INR 75,000. Question 4. Under the new tax regime slab rates section 202, what is the tax rate applicable for the income bracket of INR 8 lakh to 12 lakh? The answer is 10% tax. Question 5. How has the Income Tax Act 2025 changed the structural organization of its sections compared to the 1961 Act? The answer is reduced from 819 to 536 sections. Question 6. Regarding the residency rules for Indian citizens leaving the country, what is the significant shift introduced in the 2025 bill? The answer is the relief applies only for actual employment outside India, not for the purpose of seeking it. Question 7. Which section of the Income Tax Act 2025 now serve as the consolidated provision for all tax deducted at source, that is TDS requirements? The answer is Section 393. Question 8. What happens to the rights, benefits, or liabilities that arose under the Income Tax Act 1961 if a situation is not explicitly covered by the transition section 536 of the 2025 Act? The answer is they continue to be protected under Section 6 of the General Clause Act 1897. Question 9. Under the new TDS return form structure, effective from 1st April 2026, which form is used for reporting TDS on non-salary payment made to resident? The answer is Form 140. Question 10. For a business newly set up in the middle of financial year, how is the tax year determined under the 2025 Act? The answer is it begins on the date of setup and ends on the last day of the financial year. Let us recall what we have seen till now. Income Tax Act 2025 Structural Overhaul. New tax regimes less and standard deduction. Terminology transition tax year versus assessment year. Consolidation of TDS and TCS provisions. Residency rule tightening for overseas employment. Procedural continuity and FAQ clarifications. So ending this video here. If you like this video, like it, share it and comment below. Write in the comment box from where you are watching this video. Don't forget to subscribe the channel and to get notified for the new videos, press the bell icon.